G'day folks. In line with the Christmas spirit, I'm making this weekly Patreon scan for Patreon members available to the general public. So hopefully you get value out of it, and feel free to subscribe to the Patreon page if you do. Otherwise, just enjoy, and Merry Christmas and Happy New Year, and we'll see you in the new year. G'day folks, welcome back to Pete's Investing. Merry Christmas, Happy New Year. This is the 23rd of December. Last posting on Patreon of the weekly scans. So first off, as you all know, if you're a regular viewer to the channel, we do scans of various regions across the world of stocks that are showing bullish momentum primarily, but also some bearish momentum to look out for if you own those stocks to get out of it. A few things you should do some due diligence on your own. We're not suggesting you buy any of these stocks, we're just showing you the methodology, and for you to do your own due diligence and research and make sure you're comfortable with whatever you buy. But a few things to check for is, do they pay any dividends? Do they have a dividend payment history? And the reason for that is, at least if the price goes against you and you're getting at least a dividend twice a year, albeit no matter what percentage it pays, it's better than probably having it in the bank. But primarily my number one earning strategy is buying low, selling high. Secondary earning strategy is dividend payout if it goes against you. Look out for any divergence, and I'll cover a couple of examples on the charts that are going to follow. For going long, just make sure there's no bearish divergence potentially to get out of the trade if you're in profit, and alternatively for a bullish divergence in case there's a bounce likely. See if all the indicators line up. And of course, with any of these, there's no guarantee of a continued uptrend or downtrend. So again, just do your own due diligence. We're not recommending you buy any of these. We're just showing you the methodology. In terms of the scans, this first equation, I've changed the scan criteria to show the ADX indicator to be used, as opposed to the CCI indicator, which is still used, but not as a scan. So you can see here the previous scan was showing 85 for fresh bullish breakouts versus this week we're showing 301 stocks in a fresh bullish breakout. The overall bullish momentum across all those regions is 8,621 versus the CCI scan we did last week was 4,104. In terms of fresh bearish breakout, we had 130. Previously we were showing 29, and the overall weekly bearish trend is 3,425. So what that means is overall there are more bullish trades happening than there are bearish trades to look out for. So as always, I've included the PDFs in the description below, so you can print them out or reference them in your own time. But basically you've got the 4 different scans of the fresh bullish breakouts. Number 2 is the overall bullish count and scan. Number 3 is the fresh bearish breakout, and number 4 is the overall bearish count and scan. Okay, so first off, let's get started with the fresh bullish breakout from last week. I mentioned TMST, Timken Steel Corp shares on the US stock exchange. So what you can see here on the weekly, I've marked it here with an arrow, both at that bar there. That was Friday last week, so effectively had you entered this week you would have made that little percentage up there. So what we're looking at is, and this was based on the fresh breakout on the CCI 150. Remember the scans I just showed you were based on the ADX, and that gives us a slightly earlier entry, I've noticed, compared to the CCI 150, but still that was based on the CCI 150 back there, hence that entry, and you would have made a nice little gain had you entered during that point. So there, again, I go for a 3 to 5% gain and exit. So that would have given you just under 5% return had you traded that one there. Again, I'm just showing you the methodology I use, and feel free to adopt it to you or adapt it to your strategy. The other thing to notice as well is when you're looking at these with the ADX breakout, you can see there on the weekly that ADX on the weekly broke out on the 27th of November. You'll notice here on the day chart back here, that would have been potentially where on that little breakout there on the ADX on the daily, it would have been a nice little area to go long, but, and I'll emphasize the but, just be mindful the CCI is still showing a decline during that period. So this may be a continuation of a downtrend. So I try to combine both of these where they align to go into them. So again, I'm just showing you my methodology. Don't rely on one indicator alone necessarily. Try and combine at least two to show you the trend and potential entry and exits. Now the other thing to notice as well is I do like to see on the shares, I do like to look at the hourly as well. So for example, had you entered, and that would have been around that period there, those little bars there on that day, just notice during this period the CCI 150 on the hourly is still going up in line with the price, but notice how it drops off. The hourly bars are increasing. Here we're showing a bearish divergence. So if you pick the high, the most recent high, and a decline to the most that recent high to that recent high, and you try and match it to the price chart. Again, this is on the hourly. So what I'm saying here is basically, had you gone long there, it would have been wise to possibly take your profits, seeing there's a decline. Even though the ADX is still showing a bullish momentum down here, this may actually fall off. You can see the CCI is falling off, and it may show a bit of a retrace. Now, this doesn't mean a crash of the price. It could just mean a small retrace before taking further upside. So I'm just trying to give you another example back here. This is all moving in line with the CCI and the price. That's in alignment. That's also in alignment. Okay, I'm just trying to give you another example where it may give you a bearish. The last bearish divergence I saw in the hourly was back here. You can see there. That would have been a nice area to get out of it. Once you see that CCI declining, and sure enough, the price fell off during those hours. Now that's of course if you're watching it on the hourly basis. That same methodology applies to the daily and the weekly as well. Here as well we had a bullish divergence versus the price, and again that would have been an ideal area to go long, but make sure the weekly and the daily are in a long position on both the CCI and the ADX before taking any long positions, and it would have been a nice little return had you gone long during that little upswing there. Okay, next I'm going to show you, that was last week's fresh bullish breakout. So in terms of today, or this week's scan, I'm going to show you EAD, which is the European share for Airbus Group on the Euronext. So again, what I've done here, I've added the support resistance lines on the weekly. You can see there, this is a fresh bullish breakout. The weekly's in an upturn. The daily has a fresh breakout. And looking at the hourly as well, notice we had a bearish divergence there, and the price fell off. Now that may have completed its retrace as a bearish divergence, but just be mindful. The ADX is showing bullish movement. The CCI 150 is also broken to the upside. If that was to continue moving up, if the prices continued moving up and the CCI started breaking up as well, I'd suggest if it broke above that, it'd be a good opportunity to go long on this one as well. This is a fresh breakout. But again, the other thing to notice is the resistance up there. So you may not have much movement, wiggle room to get out if that resistance is applied. And in other words, we may not see it break above that resistance. So just be careful. You've got to look at all these little indicators, support and resistance lines as well, to make a judgment for yourself. So again, that could be an entry point to go long, but just be mindful you may not have a long way to go so far. That's a fresh bullish breakout for this week. Next one, for a continuous bullish momentum as part of that second scan. This is Rolls-Royce on the London Stock Exchange. Again, you'll notice it's bounced off that resistance at 312.50, and there's been a couple of bearish divergences back here on the CCI on the daily. Okay, you can see there it fell off slightly. Now in this case, then there's one there. Now this one didn't actually probably execute properly, so that would have been a failed divergence. These don't always work, but 90% of the time they do. So in this case, there was no drop off. So a second divergence played out there, and that's currently in play. So just be careful of this one. If you're going to go long, just be mindful that is a divergence. one way of looking at this one as well is rather than combining two, you can actually make it one long divergence like that. Make it on the CCI and make it also on the price chart. That could be one long divergence. So again, we may see a retrace to the downside, and that's respecting that resistance up there. On the hourly, again, you'll notice there's another bearish divergence. Now that may have done its dash. That could have already happened and started bouncing to the upside again. You'll notice there's a bullish movement on the hourly as well as the CCI and the ADX. So that's the bullish, after bullish scan, a second scan. A fresh breakout to the downside. I've got a couple of stocks here. Got 130. Where is it? Yeah, I think it's 700 actually. 10-cent Chinese stock, or the Hong Kong stock. So you can see a couple of things. This is a fresh breakout to the downside with that massive bearish candle. And I've got a support and resistance lines in that area on the weekly. Now you'll notice that's actually bounced off, bounced down from the 61% level of the 50 of the Fibonacci range. So if I draw a Fibonacci range there, you can see there it's actually bounced down from that 61%, and it's respecting that. So we may see further declines. Both the ADX and the CCI 150 on the weekly are showing bearish movement. Likewise on the daily, and likewise on the hourly. So don't go long on this one at this point, not until we see more bullish movement on the weekly and daily especially. So that's a fresh breakout to the downside, and that's based on the ADX on the daily breaking to the downside as a fresh breakout. And lastly, as a continuous bearish momentum, we've got Baidu, and Baidu is another Chinese company. That's part of this is on a Nasdaq, but it's a Chinese company. So no matter what you may think of Chinese companies, I'd be cautious personally. But this is a continuation to the downside on the weekly and daily on both the. Actually, the CCI is still in an upswing, but the ADX on the daily is showing a bearish movement. So just very cautiously, I wouldn't be going long on this one. You'll notice as well this one's respected and bounced down from the 61% as well. If this continues up and breaks above that area, then it's going to give us a more bullish outlook. The hourly as well is in a downtrend, so just be mindful of that. So that's what we've got. A few stocks just to demonstrate and how I look at these. You've got to consider support resistance lines, Fibonacci's. I've included the ADX for you to consider as well, the ADX 25 that is, with a CCI 150. And if they're aligned, showing a continuation of a trend or a potential reversal, always consider those. And I do trade the hourly on the commodities and currencies, but when it comes to shares, primarily I look at the weekly and daily. But I do consider the hourly on the shares as well. Like I showed you in the previous chart, if you're seeing a bearish momentum on the hourly, then consider that as part of your overall strategy as well. Okay, that's it for this year. Merry Christmas, Happy New Year, and happy trading for 2024, and I'll see you in the new year. Thanks for your support, and have a good evening and a good Happy New Year.